Welcome back to another episode, Financial Fridays, here with your boy Buck Bandit P on the Financial Corner. Appreciate y'all for being here. You already know the motto: no shortcuts, no excuses, just progress. And speaking of no shortcuts, no excuses, and just progress, make sure that y'all grab your financial freedom journal, man. How else you gonna keep track of everything you doing? You gotta have a journal. I always tell y'all, grab your notepad. Now you can really grab your notepad. Make sure you check it out right now at the Buck Bandit shop at the Financial Corner collection, so we can go out here and get this money, you hear me? Let's get right into the episode of what's going on in the market this week, man. Sheesh. What happened this week? The divided Fed and the transition of power. Ooh. The biggest headline this week wasn't just the interest rate decision, but the internal conflict in the Fed. The decision, the Federal Reserve already went over that. They said they not cutting the rates. We're going to keep them calm, all right? So they still at 3.5, 3.75 since I've been doing this. Like they ain't moved since I've been doing these videos. I'm happy that I've been keeping track so y'all can follow along with me. Since I've been doing this, the Fed ain't cut the rate, so we still right there at 3.5%. This is what happened. The vote was 8-4. This was the most divided Fed decision since 1992. What makes this crazy, why this is a big deal, it suggests that it's a lot of disagreement inside the Fed. They saying the policymakers is beefing. They like, no, yeah, we want to cut them. And I'm like, no, we ain't cut them. Like, so they beefing in that joint. So this is major news right now. No matter what way we go, some people feathers might get ruffled. The new era of the Fed, we already went over it. Jay Powell stepping down. Shout out to OG, appreciate you. And we got Kevin Walsh coming in, and he got a reputation. I ain't gonna say what his reputation is, but y'all can go look up and see what his reputation is. It's like, now it's getting kinda into spooky hours, all right? Like now it's getting, because the market is still running. Like the market is still running, which means risk on. When the market goes up, that means risk on. What I mean by risk on, people not buying bonds. Remember I said that? When inflation is high and all that, people start buying bonds. People like, no. And when war is happening and all that, people like, no, we don't care about none of that. Retail and the institutions is flooding back in the market, and they going heavy on software. Software is running right now. Software and industrials. That's where the bread at right now. That's what's happening this week. That's why the market is running. Software, and it's really software that's really holding the market up, for real. The Q1 earnings, the tech versus the hype showdown. What did I say last week? The market can't run without big tech. The market moved past all that, the peace talks and ceasefire and all that. Once them earnings came out, dog, everything was on the go. Now, this week, what happened? Palantir, AMD, and Disney was heavy hitters. Like they had some good earnings report, and that's good. That means people were spending money. Investors raised guidance, basically. So all of that means is they see them making money in the future. That's all that means. When you raise guidance, that means it's looking good. They're going to be profitable in the future. And also PWR and AME, they both reported some record earnings, record-breaking earnings reports. So that's another reason that the market ran. The economic reality check, okay? The jobs report this week concluded with the high-stakes April employment report. This report was made. Remember I said we had to wait to see what this jobs report did so we could see really what's going on behind the curtain, because if people still spending money and people losing jobs, it don't go together. However, when the jobs report came out, it's basically the same. When I started reporting this, jobs was, I think it was at 4.4. Now, 4.3. It's basically the same. People ain't losing jobs. People ain't really getting no jobs. It's basically the same. What to watch out for next week? This is all about inflation. Coming hot, then that mean higher for longer inflation. And all that mean is we not trying to cut no rates. Like, that's what all of that means. So the big three reports on the 12th, we got the CPI, the Consumer Price Index. And all that is tell us how much prices are going up or going down. That's all that is, okay? And then we look at the producer price index, and all that is looking at inflation from the business point of view. How much they potentially have to raise prices due to inflation and all of the other stuff that's going to cost us to make the goods more expensive and more expensive to get them to you. That's the producer price index. And US retail sales. This shows how consumers really feel right now with the high prices. So if the retail sales coming good, then that means people still spending money and the Fed ain't gonna rush to cut the rates. That's basically the breakdown of everything that happened this week. I want to point out a couple more things, man, because this week has been a telltale sign of why you should not ever sit on the sideline. This is a telltale sign of why you should always be invested and why you can never afford to not participate in the market. Even if you have a recurring automated investment, if you pause it, like if you've been investing for 6 months, something come up and you pause it for a month, that is, don't think that, oh, I'm falling. No, that's perfectly fine. Life happens. But what I'm saying is you can't afford not to be invested at all. You have to start participating and start playing this game, because now more than ever, people are going to get left behind. These prices are not going to get any cheaper. It's not going to get any easier. The limitations are not, and the qualifications are not going to get any looser. We have to take advantage of this AI stuff that's going on right now. We have to take advantage of how we can learn so much information right now in a short span of time. We have to take advantage of real people online, not no influencer people just selling your lifestyle. No, people online that's really giving good information on how to set you and your family up better. You know what I mean? Like, that's what we need to focus on right now. All the other stuff is distractions. Like, because what's going to happen is we're going to get distracted by this Trump, this midterms, all this, something else crazy. God forbid, but something else crazy is going to happen. It's going to cause a whole country to be looking at this one situation. And meanwhile, in the background, that thing going to be doing what it's doing right now, going up. So I need y'all to understand how vital of a time we are in right now. I need y'all to understand how serious of a situation this is. I need y'all to understand you have to get in this market and start participating, because it is the great equalizer. Well, it was. Ever since I heard about these AI agents, that is the ultimate equalizer. Well, the stock market is the great equalizer. The AI agents are the ultimate equalizer. Combine that, you can set your family, you can free your family for generations to come, man. I ain't gonna hold y'all here too long. That's your Financial Friday. Give me a like if I gave you some information you ain't know, if I helped you out. Make sure you share it, and also subscribe to the channel. And lastly, make sure you hit the Buck Bandit shop and go to the Financial Corner collection so you can see the merch that we got, and also so you can grab your Financial Freedom Journal. All right? No shortcuts, no excuses, just progress. And with that, you already know what time it is, y'all. Let's go out here and get this money.